Hi, Larry Gaines, Power Cycle Trading. In my last video that I put out, I was talking about the three different types of earning strategies that you can have on a particular stock. So, we talked about a trend trade into earnings release, the earnings release trade, a non-directional trade that you can set up, and then a post-trend trade after an earnings release. So in this video, I want to show you a really cool example. This is a trend trade into earnings on Netflix, and doing it using a pairs trade to offset any systemic risk that might happen in the market. So this is what I call a market neutral pre-earnings trend trading strategy. This is Netflix long, QQQ short. Now by going long Netflix, this was right on the 1st of October 2015, so this was the last earnings cycle. So you can see a really nice setup here, just based on my power cycle trading model. Momentum cycle 1 and 2 were up, so just a nice setup to go long Netflix. So now you could have gone just long here on options, going long, calls or something like that is the direction you'd want to take, because implied volatility increases, so you get the benefit of that if you're long options. Or the other way to do it is go long Netflix and sell something against it to create a pairs trade. And this offsets a lot of systemic risk. So, for example, if the market was to crater to the downside for some crazy reason, Netflix potentially could still have more strength than QQQ, and you could still basically make a profit on the trade by being long Netflix, short QQQ. So here's the setup. So this was on the 1st of October. Got out on the 9th right here when it was starting to roll back over. And here's what it looks like when you set it up on a pairs trade. So here it is again, October the 1st right here, getting in, going long Netflix, one share, short QQQ. So you do, 100 by 100 shares in this example. So you'd be long 100 shares of Netflix, short 100 shares of QQQ, and then got out here on the 9th when momentum started to shift down. So got in at $4 Netflix over QQQ, got out at $8. So that's $4 per share. If you did 100 shares, that's $400. And then here's earnings, were released right here on about the 12th or 13th. So, that is a way to play an earnings trend trade into earnings. So if you'd like to learn more about trading into an earnings season, join me for a free webinar I'm doing. Just click on the link below, sign up. Look forward to seeing you at the free webinar. And let me just go over what I'll be covering. So this is a 5-step plan for earnings season success. How to find volatility. So I'm going to go through how you identify stocks with high volatility and take that to your advantage. A screening process for finding the most probable high winners. So it all goes back to looking at the various stocks that have a history of doing certain things in an earnings season. And then a stock checklist that I go through, my favorite trading tools for an earnings, and then you're going to also see my favorite non-directional earnings release, post-earnings trend trade strategies in this free webinar. So just sign up by clicking the link below.